Today is June 15th, 2022. I'm here with Damian White. My name's Todd Graff, and this is the Gold Spot. Okay, so Damian, I've been hearing a lot from my clients about the Federal Reserve meeting today, and a lot of talk about interest rates and what they're going to do. Can you tell us a little bit more about today's Fed meeting?
Yeah, absolutely. So yeah, today's a very big Fed meeting, very highly anticipated. We're going to be looking at raising interest rates. The anticipation is between 0.5% and 0.75%, which has actually just recently come to light here, probably this week, last week after the consumer price index inflation numbers came out really high last Friday. So a 0.75% move is very it's really high and really a large move in relation to what we've done in the last 20 or 30 years. The last 0.75% move was back in 1994 with Greenspan. So what they're trying to do is tighten monetary conditions, make it more expensive to borrow, and that will bring liquidity out of the system and bring inflation down. Well, we've already seen interest rates on housing go up dramatically. Buyers' purchasing power has dropped significantly, and they're trying to slow the economy, but they've put such easy monetary conditions, 0% interest rates, and huge amounts of money into the economy for years now. But after the pandemic happened, we have just raging inflation. And so the concept is that the Federal Reserve is really behind the ball right now. They need to raise rates more aggressively. So we're going to be looking at an interest rate increase today, probably 0.75%. Then they're going to do it again in July. Then they're going to do it again in September. So you're talking another 1.75% at least. So you're talking the interest rates could get up to maybe 5% at that point, which would really be difficult for the U.S. government to repay debt. So we're basically getting it from all sides right now. And so, yeah, it's a very anticipated move, and that will have ripples around the world. I mean, U.S. monetary policy and the U.S. dollar is entrenched just about everywhere. So we are highly anticipating that, and we're going to see what happens. It'll have effect on all financial assets. However, there's other economies out there around the world that are making moves as well. Maybe you want to expand on that.
Yeah, I mean, this is a global thing that's going on. I mean, the second biggest economy in the world, China, I mean, they're having problem after problem right now. I mean, they had the Evergrande issue about a couple months ago. They're still dealing with that. They've had the COVID lockdowns just up until recently, maybe a month now. And now there's a lot of reports. I'll put a link to an article in this below this video, but there's runs on the banks right now in China. It's real quiet, and the media hasn't covered it very well. But I mean, people cannot get their money out of the banks. The banks are stopping all withdrawals. So there's lines around the corner. This is just adding to all the liquidity problems and the monetary policy problems that are global. So this isn't isolated to just here in the U.S. Really every country in the world is going to be affected by changes to the fiat monetary system that we're going through.
Well, what I do think one thing is that we are going to be looking at gold and silver going higher. We're in a temporary malaise where monetary conditions are tightening, but the Fed is so far behind the cue ball, the 8-ball, however that phrase works in regards to inflation, that this same situation happened in the late 70s when the Fed raised rates from about 7 to 20%. Gold went from $30 an ounce to $800 an ounce back then. So we could have explosive moves, and it's one of the only assets out there that you can still, as a store of value, we're seeing that cryptocurrency is not as well. It hasn't been recently. So people are trying to protect money. Precious metals are one way to do that very effectively.
Absolutely. Well, that's it for the Gold Spot. Join us again next week, and thank you very much for watching.